All right, well, let's get in Mugunthan Siva. He's Managing Director, India Avenue Investment Management. He's joining us right now to take some questions on the market right now. India Avenue is a boutique investment firm based in Australia, and they have about 600 crores of assets under management. Mugunthan, great to have you back on the program. Thanks very much for your time. I mean, I think from the last time whether we spoke, which was about a year ago, markets have done very, very well. Right?
Yeah.
In line with expectations, much better. Did you think we'd do this well?
No, I don't think anyone thought that. But I think there's been a few factors at play that have definitely benefited India. Largely, for an Australian investor's point of view, the demise of China and several attempts to play the China trade haven't worked out. So India has stood out like a sore thumb in terms of global growth, as well as the appeal of the market, and corporate earnings have been very robust. So I think that's increasingly being identified as by the foreign investor as a place to go.
Well, that's interesting, right? Because at a time when most of our global peers are going through recession, in Japan, UK, we've seen what's happened with the China market, the property bubble there. The narrative is that more money will now come into India, despite the hike that the rise that we've already seen in the markets. Would you concur with that view? And is there more to go on the upside, you think, this year?
I definitely concur because, as a business, we started 7 years ago, and it was very difficult at that point to sell an India-only story. And over the last 1 to 2 years, that story has become much more easier to position, simply because India's growth rate is a standout, as you said, relative to the other economies. And also, investors at the end of the day still chase returns. And the returns now, relative to even the US market, are standing out on top. So I think that's creating more and more of an appeal for investors to segregate India from emerging markets or global investing and take it as a standalone exposure.
All right. Hi, Mr. Siva. Good to see you in the studio. Give us a couple of names, though. Say in the last 6 to 8 months, what have you added? And what are you looking to add? Because it's quite rare that you get top quality names at attractive valuations. Case in point being the private banking space.
Sure.
But you could name a few that you all have, increased your allocation or taken fresh allocation, say in the last 6 to around 12 months.
Yeah. So just on that, as part of our process, what we do is we select local fund managers that provide us advice to help us build a portfolio. So we invest as an FPI. We invest in stocks directly, but the advice comes from the local fraternity because our view is you have to be in the Indian ecosystem and understand local ecosystem to be able to invest here. Spaces where we have made money in the last year to 2 years is real estate, pharma, where we've been overweight, as well as certain segments in industrials and as well as autos. So there are certain stocks that have certainly benefited the portfolio, particularly in the pharma and real estate side.
But in a space like real estate, right, you were just discussing it as to how some of these stocks, like say a Macrotech Developers, is up 70% in the last 6 months. I mean, that's no mean feat. Do you think that there is more upside despite the rally that we've already seen?
I think you can relate that to Indian markets in general. There might be a phase where there's a time correction or a flatter period now because we've had such a steep ascent. But the medium to long term still looks more attractive than anywhere else in the world to me. So I think it's a matter of patience. And we know that things can't go up in a straight line. So it's just a matter of stock picking rather than passive or index buying. That's our view.
Okay. You started by using the phrase China's demise. So, is it that? I mean, it's a very definitive thing to say, or is the process underway? And I mean, the decline, right? I mean, it's not is it a demise or a decline?
Well, let's look at 3 years ago. China's weight in the MSCI EM was 40%.
Yeah.
Today, it's down to somewhere closer to 25%. India was 8%. And today it's up to 18%.
That's just a function of market cap, right?
Cap.
I mean,
function of market cap, but that's also, many investors who are structurally invested in China from 2015 to 2020 that were building exposure, who are now starting to quit on a sovereign risk concern. So from that perspective, I think people...
Is that still happening or is that yesterday's story? Because whoever wanted to leave, I'm assuming, would have left, right? I mean, investors, especially in equities, are forward-looking. So actually now the question is, are we at a point where you need to start to look at opportunities? I mean, it's a very large economy, and I mean, you can't write it off.
Absolutely. I think what's happening is people will play it as a tactical trade and say, I'm going to China from a valuation basis because relative to India, the spread is massive. But structurally, I think a lot of those who are long-term investors would be much more cautious on that. You're still seeing a property sector which is showing signs of weakness and continual fall in valuation. And most people's wealth is stored in property in China. So I don't think we've seen the end of it, but cyclically, it might be a time when people want to add some China exposure because of the valuation is so cheap.
What about some of the other spaces in the Indian markets? You know, there is this big debate about which sector will assume leadership between IT and banks, right? But both sectors have their own challenges. IT spending is a bit of a concern, especially client spends, and banks as well have some concerns on the margins, etc. Where do you see the scope of outperformance now?
I think medium to long term, IT still looks like a good sector to me. I think it's a slow but steady process that India continues to win market and profit and economic share in that space. When we look at some of the businesses, we see that they're under-owned and there's substantial potential for increase and more favorable valuation. When it comes to banks, obviously they're a market darling of foreign investors, and some of the valuations that they're trading at now look quite attractive relative to where they've been in the past. So those two sectors definitely for a foreign investor will come under more interest. I think once people play this China trade, then they'll come back to India again, and at that point you'll see these two industries do quite well.
So a longer-term relationship with India, but maybe a bit of a fling with China in the near term, so to put it.
Absolutely. I think India is adding structural investors. China might be adding tactical investors. That's the way I see it.
All right. One of the other things that support the Indian markets is political stability. And leadership at the top has been rock solid. Reforms, the PLI scheme, I think you have written about it in your note as well. What's your view? Do you think bulk of the good news is in the price at current reckoning? We have a big election. Yeah. But the outcome is almost being priced into perfection.
Yeah, we saw that in December once the state election results came out, that the foreign investors basically said, well, it's a fait accompli. So I think it's largely priced into the markets. And maybe post-election, there's a sell the fact potential that might exist. But I think broadly, there is a lot of confidence in terms of the stability, macro, as well as politically with India.
All right, Mugunthan, we leave it there. Great conversation here. As always, appreciate you joining in with that perspective, and good to have you back here.
Thank you very much.
And while